Hello, good afternoon, everyone, and Happy New Year again. Welcome to this session where we'll be getting ready to trade the economic news that will be announced shortly in 15 minutes. So let's get ready, so to speak. So as usual, you start off the day or start off your analysis with the economic calendar. Let me bring that up. So today is Tuesday, sorry, not Tuesday, I'm mixing it up with our regular Tuesday morning session. So today is Friday, last day of the trading week. So today is Friday, the 8th of January. Again, remember this is all GMT plus 2 time zones since I'm in Rwanda. So today is Friday, last day of the trading week. And we already know that there's this report coming out shortly in 15 minutes. Although there are 2 reports coming out, the Canadian unemployment rate and then the United States unemployment rate or the non-farm payroll. But of course, it's the United States report that is really of huge significance. This report comes out on the first Friday of every month. It comes out on the first Friday of every month, and it affects all markets. All markets are affected by this report. The fixed income securities market, all the global stock markets, commodities market, all the currency pairs, all the markets are affected by this report. And like I say, it's highly anticipated because everybody knows that it comes out on the first Friday of every month. So everybody's expecting it, anticipating it, and it has a huge impact on all the markets. So there tends to be, again, don't forget, you don't use the words always or never when it comes to the financial markets. You can use the word always or never. But usually when the markets usually trend sideways prior to the last report of high importance of the day. And of course, reports such as this is of extremely high importance. There's a high probability of the markets trending sideways prior to the report. Hence why we just avoided trading today, just left the market alone. And then we'll now reassess the market just before the report comes out. So that's the last report for today. For those who don't know, obviously, if it's called non-farm payrolls, which just means they've excluded the farmers. There's a huge farming community in America. So when they are calculating unemployment payrolls, they exclude the farmers. So the farmers are excluded from that. So that's why it's called non-farm payrolls, so non-farmers, which is basically just the employment rate. Okay, so now that we now know that the report is due out in about 10 minutes, so let's assess the market and then see what we should do or how we can get ready for the report. So this morning, the market was initially trending sideways between these 2 white lines this morning. Now you can see here where it broke the sideways trend there, fell down, and then you can see just gradually creeping up. So this sideways trend, we can more or less ignore that now because that's been broken. So let's now concentrate on what's happening now. So you can see it fell, got to a low point there, formed a high. Let's make it bigger. So we can see where it fell down, from the low point there, from the high point there, from the low point there. That low is higher than that. And then from the high point there, that high is just about higher than that. But you can see then from the low point there, which was lower than that. So it's still trending sideways here. It's gone up, fallen down. That low there is higher than that. And it's gone up from the new high, then a low, which is higher than that. So you've got a higher high and a higher low. But again, you can see this low here is lower than that. So again, still trending sideways there. And then you can just see it's not forming higher highs or higher lows. So it's just creeping up and down the place. So for now, I'll just put the sideways trend as the low point being there because that's the most recent low point. Like I said, we'd had a a low point there, a high point, and a low point, and then this low went lower than that. So let's first put the low point, the candlestick there. The low there is 1.2232. So 1.2232. I just want to see it on the 5-minute time frame, and that's a bit low. Oops, low. And the highest point so far is this candlestick. So the high of that candlestick is 1.2254. Let me just see this high, if it's the same. Yep, 1.22535, which is basically 1.2254. And I only want to see it in the 5-minute time frame. That's the high. So that's the sideways trend for now. As we wait, of course, as we all know, the market is dynamic and things keep changing. But at this exact point in time, market is currently trending sideways. That's the low point. That's the high point. We can see that the S1 is outside the sideways trend, and the pivot point is outside the sideways trend. So like I said, the report is going to be announced in about 9 minutes, but we'll still give it a couple of minutes before we place our pending orders, because what you don't want is for the market to just all of a sudden spike just before the report is announced and takes your order and then takes you out of the trade, which, although it rarely happens, but it can happen. So that's why I usually like to wait till about 5 minutes before the report is announced before I start placing my pending orders, especially from a sell trade here, because you can see the S1 is a bit close to the market. So, just a couple of minutes to the report, you could just find, a bit of volatility before the report. It just goes up and down, takes your order, takes you out, even before the report comes out. So that can happen. So that's why you want to place your orders as close to the time of the report as possible. But of course, again, you don't want to be too late, because as soon as the report comes out, there could be, again, there's nothing like always or never. You just have to be prepared for anything. But sometimes the market could react violently to the report, that the second they announce this report, it can either shoot up or shoot down. And if you're not ready, you could miss out. So it's striking that fine balance to not have your order placed too early. And of course, you don't want to be too late. So that's why usually I place my orders just about 5 minutes to the report, or less if possible, maybe a couple of minutes. Okay, so at least the pivot point is quite a distance, so we can start with that, and it's almost almost 3:25 on my time. So let's start with the buy. So if the report comes out and the market ticks up and it goes up, well, I'll be happy to buy if it breaks the pivot point. Now we can see the pivot point level is 1.22858. Obviously, you use the parameters on your own platform, because sometimes the platform's parameters might differ by a couple of pips. So you go with your own platform, whatever the parameters are showing on your own platform. So the pivot point line on my platform is 1.22858. So I'll just round that up to 1.2286. So I want to buy 2 pips above that. So that would be 1.2288. So let's buy 1.2288, 20 pips stop loss, 1.2268, and the 60 pips profit limit. I'll just bring out my calculator. So that's 2288 plus 60. So that's 2348, 1.2348. So there we go. So the report comes out and the market goes up, I I'll be happy to buy 2 pips above the pivot point with a 20 pips stop loss and 60 pips profit limit. But if the report comes down, the market falls, then I'll be happy to sell if it breaks S1. S1 is 1.22276. So again, I'll just round that up to 1.2228. And 2 pips below that would be 1.2226. So 1.2226. So 60 pips, 20 pips stop loss, that'll be 1.2246. And take profit to be 2226 minus 60, so that'll be 22. I'm just using my calculator. 2260 minus 60. Oh, sorry. 2226 minus 60. That's 2166, 1.2166. So you can now see we have about 4 minutes to the time of the report. Which is about 327, and then I'll place the order. But yeah, I've got it already. So that's 1.2226, 2 pips below S1, 20 pips stop loss, 60 pips profit limit. And just going to give it a couple of seconds and then we'll go for it. So like I said, this is what I usually do when I'm trading on my own. I just like to get my orders, especially if they're close to the market. I like to place them as close to the time of the report as possible. There we go. So I'm all set. I don't know how the market is going to react. We don't know if the report is going to be good, bad, or indifferent, and we don't know how I don't know how the market is going to react to it, whatever the outcome is. But as a trader, again, I always say that's why trading is different from investing. As an investor, you want to be looking at the trends, you want to be looking at if the unemployment is going up or going down and other factors and blah, 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 blah. But as a trader, all you just want to do is capture pips, capture movements in the market and be done with it. So the ifs, the whys, or whatever, it doesn't really concern you as a trader. All we just know as a trader, this report can affect the market. So I will avoid trading before this report. And when the report comes out, it could either affect the market positively or negatively. If it affects the market positively, I've got a buy order entry point to buy if it affects it positively. If it affects it negatively, I've got a pending sell order to sell if it affects it negatively. But I'll leave the market to decide what happens. Nobody knows how it's going to react. Only God knows how it's going to react, and I am certainly not God, and nobody is apart from the true God. So that's why I always have my pending buy and pending sell using the pivot point strategy. Again, like I always say, there's 1,000,001 ways you can trade. The pivot point strategy is just one of many ways you can trade, or whatever way you trade with, so long as you're clear as to what your entry points are. And then you make your decision as to where you want to enter the market, and then obviously apply money management. Make sure you're risking what you can afford to lose, because going back to money management, regardless of what you do, there's a 60% chance you're going to lose out on that trade. So make sure you apply good money management. And then just be consistent with whatever plan you're using. Okay, so the report's going to come out now. If you have any questions, you can either raise your hands or send your questions through the chat box. Because like I said, we've already made our decision of what to do. So there's really nothing else for me to do apart from let the market do what it wants to do. So while we wait for the report, which should be announced in a couple of seconds, we'll give it about 5 minutes afterwards, after the report. And if there's still no questions after 5 minutes of the report, we'll end the session. So like I said, if you have any questions, do you can either raise your hand or send it through the chat box. Okay, so you can now see the market just sort of reacting to the report. But again, this is typical. You just get it jumping up and down. It's the market trying to decide, you know, how to react to the report. So you just see it jumping up and down. And again, that's why whenever you're trading news reports, you don't want to have your orders very close to the market, because this is what happens when the report comes out. It just moves up and down for a while before it starts to, before it gains direction. And you don't want to be caught up. I mean, sometimes you can't avoid it. You get caught up in that kind of chaos with the first 5 minutes while the market is still trying to decide how to react, to the report. So sometimes, you really don't want to be jumping in very close to the market. Let's see how the other markets have reacted. That's the pound dollar. For those who have watched the video on the trading platform on money management part 2, so I've now added pound dollar and dollar yen to my trades. You can see the dollar yen has now broken the moving average from a swing trading point of view. So as you can see, that's a swing trade opportunity. I'm not saying you should do that, please. Don't do that. I'm just saying that's one of the markets I'm trading and gotten a swing trade in with the dollar yen. But don't just jump in there. If you're not trading the dollar yen, just leave it alone. Let's get back to the one we're looking at. Okay, so still deciding what to do. But like I said, we'll leave the market to decide. I have decided where I want to sell, and I've decided where I want to buy. And I leave the market to decide what he wants to do. So I've made up my own decision. I know what I'm risking per pip. I've got my 20 pip stop loss. I'm risking 50 pip per pip. My own decision is made. I leave the rest of the market. Any questions before we all go for lunch and leave the market to do what he wants to do? Any questions, comments before we end the session? So we're all good? Brilliant. So if we're all good, I'll catch up with you all on the platform. We'll see how things pan out and see what the rest of the day has in store for us on the market. So enjoy your lunch, everyone. Take care.